Yes, sir. Hey, she's ready to go. She's ready to go. Hey, guys, listen. I think even a blind man can see at this point right now with everything that's popping out with AMC that she is ready to launch, and I think that she's taking her launch off from the pad. We're going to go over some key notes of what's going on with AMC, but first I wanted to go through this clip as usual. Something I always like to bring is a clip of something interesting of what's going on in our current affairs in the market, but these financial analysts are kind of giving their prudence or understanding of what they think is going to go on with the financial sector, which of course is direct impact to any people that are short or anything really involved in the stock market. So let's tap into it. Get down to it. Oh, try it again. Get down to it.
And it is time for the word on Wall Street. Top investors watching your money. Joining me right now is Verdence Capital Advisor CEO Leo Kelly and Baird Investment Strategy Analyst Ross Mayfield. Gentlemen, good to see you both. Thank you so much for being here. Ross, kicking things off with you with a market that is trading higher this morning. Fractional gains, although is this the calm before the storm? We got a lot of data and earnings coming out this week. The big banks will kick off earnings season this Friday. JP Morgan, Wells Fargo, Citigroup, PNC, all reporting their first quarter before the opening bell. Don't forget, this is a quarter where Silicon Valley Bank collapsed as Signature Bank collapsed. And, of course, we got a market that traded higher in the first quarter. Ross, what do you expect on earnings?
Yeah, well, you're exactly right. The market traded higher despite this banking crisis. And it's really a tale, of two parts of the quarter, because for the first 10 weeks, the economy was surprising to the upside and banks were probably feeling pretty good about that. But everything changed with Silicon Valley. You have deposit flight. You have banks probably building loan loss reserves as they wait on net interest margins collapsing. So I think the banks are going to set a really kind of dour tone for the rest of earnings season as they, preview what's going to be a difficult year ahead as credit conditions tighten, lending dries up a bit. It might not be quite as bad as feared, especially for the bigger banks, which might be a beneficiary in the end. But it's going to be a bit dour, I expect.
Well, look, we've got an issue with earnings because people are expecting the economy to slow down. FactSet, said that earnings are going to be down 6.8%. Is that what you're expecting from the first quarter reporting season?
Yeah, we expect earnings to come down year on year this quarter. We do expect that they've probably peaked for this cycle. I think the question from here is, do you get kind of
there's a lot of sentiment
earnings?
Is everybody noticing how the sentiment, there's more to come with this recession? Guys, personally, I believe, and this is why I'm buying in the high stocks with a bunch of pricing power, like Tesla, Nvidia, stocks that are going to be the stocks of the future, XRP, HBAR, those cryptos, just because of the simple fact of the sentiment and by the way everything's looking from the financial market, you're kind of realizing that there's going to have to be a new means of who the big dogs are in the stock market. Because even companies like Walmart are closing down stores and resealing in things like this. It's like this reset is going to shake off a lot of leeches that are in the financial market. So a lot of companies that are putting up these numbers like they're doing good, but they've been doing bad, or they've been getting loans and all that stuff like that. But they're just listen to Sidham, how this guy, I ain't heard nothing good come yet from what he's saying. They talking about I think we might be going into a recession.
Growth,
no, we've been in a recession.
Down 5% or so, or do you get a normal recession earnings contraction, which can be closer to 20-25% over the next year? And guidance has been pretty negative overall this year. The economy has certainly taken a turn since the Silicon Valley banking crisis. It's slowed, and the Fed is continuing to raise rates, even if it's at a slower pace. So we do expect earnings to slow from here. We think we probably put in the cycle high for earnings. And, the only question from here is how far do they fall?
Yeah, and it is about higher interest rates, right, Leo? I mean, there are expectations that there is $1 trillion in corporate debt on corporate balance sheets right now that have to roll over. They're going to be faced with higher rates, and Stephanie Pomboy expects that to mean higher number of bankruptcies. The New York Fed survey reporting that inflation expectations will rise to 4.7%. 1 year from now, that's up from 4.2% in February. It's the first serious increase since October. We've got the big week of inflation data this week. We've got the March CPI out tomorrow, the March PPI out on Thursday, retail sales out on Friday, Leo. How do you see the inflation
About to get a
story,
little
and
intense.
what does that mean for the Fed?
Well, I think the Fed is stuck between the rock and the hard place, where the rock is inflation and the hard place is a fragile banking system and an economy that's starting to teeter.
I've been saying this.
Our expectation
double
has
gun
been
scenario.
and continues to be that we will be in recession by year end. We're already in an earnings recession, as was
Thank you. At least
basically
somebody's
mentioned
saying
a couple
something.
seconds
Jesus.
ago.
I mean, we're in a recession now.
We're in a rough spot here. We do think that we are seeing a cyclical or a quick bull market recovery of bonds, only to restore the bear market in bonds that we think is going to be a long-term impact on the markets. So from an investor's standpoint, I think the Fed's a little stuck here. They're going to try to squeeze this thing right through the needle hole, and I think they're going to have a tough time with it. So the economy continues to slow. I think now is a good time. The market's rallied. It's been a great rally in the market this year, somewhat surprising given everything we're looking at, Maria, with the slowdown in jobs starting to pick up,
that's
with
the scary
inflation
thing.
being persistent. This is a good time if you're an investor. Rebalance your portfolio.
There we go.
Build a little bit of a war chest of cash, because one thing that I don't think investors are ready for is volatility is here to stay. We've had below normal volatility for a couple decades. I think we're going to see higher
Retail's
volatility.
been dealing with
Have
it.
some cash. Take advantage of that volatility.
At least
So
retail has
raise
been in
cash going into what you are
momentum
expecting
stocks.
to be a sell-off at some point as markets digest what's happening in the macro story, and that is slowing economy, recession.
Yeah, and Maria, volatility is not a bad thing. And by the way, recessions, for some reason, the Fed and we have all basically become addicted to painkillers.
And guys, you got to realize, retail got people. Everybody that's been involved in momentum stocks understand that the market is going to move entirely in itself towards momentum stocks after this. Like, and not in the sense that it's going to be like GameStop, but Apples and Teslas and things like that, you're seeing them, they're running $40, $50, or they have breakouts, things like that. They used to not do but 3 or 4%. You're starting to see a lot more volatility coming into all these different stocks, which is not a bad thing. This is why I'm saying the greatest generational wealth transfer is happening now. You're going to see Apple snatch off to $500 a share and Tesla back up at $1,000. You'll be like, damn, it was $160. Do not miss these opportunities, I'm telling you. And it has some money on the side, sitting back on the sideline.
On a steady climb up. Recessions clear out inefficiencies in the economy, bad businesses. Volatility gives investors the opportunity to invest at lower prices and make long-term rates of return. You mentioned risk in the corporate bond market. High yield spreads have remained stubbornly tight. They're just still priced too high. And this is a dangerous time where people reach for a little more yield and take on too much risk. Again, patience. High yields will become more attractive in a volatile market. We have a lot of economic pressure to work through. So yes, be patient, be active, and cash is a good asset class right now.
All right, we'll be watching and we'll leave it there. Leo Kelly, great to see you. Ross Mayfield, great to have you. Thanks so much.
Sweet, sweet, sweet. All right, guys, let's get down to the juicy. But like I said, I feel like this is a good informative video. Guys, having a bulletproof long-term portfolio and separate portfolios for your swing trades and momentum trades. But you need to be stacking up on some of these companies that you know are going to change the future. If you aren't holding Tesla, I don't know what you're doing. If you aren't in Elon Musk's hands, I don't know what you're doing. Let's see if we can get up out of here. There we go. All right, so let's double tap over, guys. Just tap it in automatically. All right. Good. Because last time they loved to change it when I'm about to bring it up here. Guys, market cap, AMC stock, market watch now. And like I said, these numbers have been sitting up here for a while. Why? Because these are the actual numbers, not glitches. But guys, check this out. Market cap on AMC. Let me make sure I'm here. Yeah, market cap on AMC, 7.9 billion. Look at this. It's saying the public float is not even applicable. It's just not even putting a number down there. These things are exploding. Things are breaking. Things are breaking. How are they breaking? Look, here we are on TD Ameritrade, 1.5 billion. That's pretty close to the one that's over here at 1.7. Excuse me, that's 7.9. Jesus Christ, guys. This is getting as close to 2 years as it ever been. You are feeling in the air that hedge funds are down. Something went wrong. I told y'all when they had that news come out that they were selling and it dropped the AMC shares in ape spike, that they miscalculated even further, and that algo dropped a bunch of shares. 30% worth of shares at that price. It dropped a bunch of shares, assuming that it was going to be, all right, we're about to get ready to be able to do our conversion with ape. When an ape, boop, now those shares are gone. How gone, you ask, Brandon? Here we are. 0% shares still sitting up here every single day. I just love seeing that goose egg. Every single day I come in, I see that goose egg. I say, oh my, we got our foot on their neck. But here's where it's getting interesting. Oh my God. They're borrowing all these little small 200,000 blocks for 976, 976, 976, 763, 763, 775, 735. And of course, no shares available to end the day. Jesus. Short interest. 26.89%. We're going to 27%. Guys, why are real numbers coming out? Something broke. Something let loose. And somebody asked, oh, why don't they cover? Guys, it's too big to cover. It's too big to cover. Legs are being pulled apart. This right here is that window I was talking about. We have the opportunity. Hey, there's no cap on price. There's no cap on price right now. But of course, like I said, let's not get too far ahead of ourselves. We're looking at our charts here. Here's our hourly. Like I said, I don't know if that was Monday. Let's see, whatever the 10th was. We were looking for the break of the 516 and hold. We did that. Broke 537. And now what we're looking for here, and like I said, it ran above it. I'm looking for it to hold this 537 level as support. Holding above that, guys, we still wickedly split. Irregardless. And they took all those shares anyways to try to bring that down. But if you look down on the 5-minute chart, you'll see the drastic movement that's going on here. We went up and touched 574. And like I said, guys, look, you seen it tap that 537 level. Look what happens. Here we are down here loading. Y'all should be able to tell the story. Like I said, in just as a reminder of what I'm saying, how I'm thinking with the price projection. I look at all this in between from this range to breaking to above 646 as a range of just climbing FOMO and news. That's what all this is. That's the only technical analysis you need to know from what's going on in here. This, as long as it's staying above this line, and then a break of this line means something significant. But all this right here, there's no set limit of, oh, it was these levels, it was that level. No. Because this fall down here was just a pure pummel of short selling. They literally just ladder attacked it. There was no holding levels or anything. Nothing. They just walked that down. So we're back in that range already. Look at that movement. We thought we were cooking with grease up here. I woke up outside and said, oh, damn. Thing and ripped past it. And now, like I said, we're in that range. We break through that 6-4. Guys, we making runs. We're making moves back up to 8. I mean, hey, we're very close. We're very close. We're just looking, like I said, take it day at a time. But like I said, breaking that 646 is something significant. Like I said, we are very close. What is that? $1 and some change away? All right. Hey, I'm telling you right now, AMC's got those jets on. I'm by everything that's coming out, the news, the short interest, the shares available. All this shouldn't be coming out like this. You shouldn't be seeing this. Like, I'm on market watch now. You shouldn't be seeing this. TD Ameritrade. There are no glitches like that. Nobody's writing out with their hands. That's computer. That's just data that's it's receiving. But nonetheless, guys, say y'all, hey, hold tight. Get ready for some games, baby. I truly feel like we got something cooking. Like I said, I don't see anything right now as an immediate danger. But like I said, keep your head on the swivel because you know AA is in the back looking for something to do. Same with hedge funds. Stay ready and stay up, baby. Hey, y'all, hey, I love all the support. I appreciate y'all coming through every single time. Like I said, hey, this is the retail family building. This is the beginning of our retail saga. We just trying to get up out of here with some of our cash, get ready to devastate the rest of the market, baby. Hey, y'all get ready. We in our window. Hold it down. I say one more time, hold it down, baby. Yes, sir.